Howdy out there, folks. It's Darius Dale here to present our macro minute for Tuesday, April 26, 2022. Starting with markets this morning, we have stocks mixed with U.S. equities lagging this morning, commodities up, crypto up, dollar up, global bond yields down. Shifting gears to our market moving headlines this morning, yet Chinese yuan advanced for the first time in 6 days after the central bank vowed to support it and the economy. So the central bank, the PBOC, they took down their sort of FX reserve requirement ratio for foreign exchange deposits to 8%. That's down from 9%. So that 100 basis point decline will allow Chinese financial institutions to go out and buy dollars to support the yuan. The PBOC also said they're going to step up, quote unquote, prudent monetary policy to support the real economy, especially for industries and small businesses hit hard by the pandemic. It's unclear how much easing they're going to do, but again, we continue to monitor signs that they're easing at the margins, but not nearly enough to sort of create a broad-based global reflation. We'll be touching on that in the leadoff morning note today. So for those of you who want some more intel on that, feel free to subscribe. Shifting gears to the sort of geopolitical risk, yet Russia's foreign minister, Sergei Lavrov, came out and said that nuclear war is a serious risk. I mean, I don't have any game plans, just for the record, in terms of helping you guys trade nuclear war. All bets are off in that regard, but I definitely think that's a pretty meaningful headline in the context of, the market trading where it is from a risk asset perspective. And then lastly, you have the U.S. They look like they're going to ramp up global food assistance. We're continue to see countries sort of pour out support for Ukraine. At the margin, will continue to prolong the conflict. As long as Ukraine is receiving arms and all the assistance it needs from the humanitarian front, the longer that the conflict can prolong itself, and the more risk to global food supplies, global energy supplies, global coal supplies, et cetera, continues to mount. Big movers this morning. You have the China Shanghai Composite off another 1.4%. It's down 10% month over month, but you finally had a little recovery in the commodity space, physical commodity space. Bloomberg Agricultural Index up 1% to 2% month over month. Bloomberg Industrial Metals Index up 1%, but it's actually down 6% month over month. We talked about that, at least in our previous leadoff morning notes, while we've opted for the sort of energy and ag side of the trade with respect to physical commodities, as opposed to the base metal side of the trade, which tends to be much more tethered to the global demand cycle. Shifting gears to our volatility adjusted momentum signal and probable range processes, US dollar index that is still bullish, VAMs. You got minus 1.9% of downside versus 0.4% of upside in its probable range. Gold still neutral, VAMs, minus 0.3% of downside versus 4.6% of upside in its probable range. 10-year nominal treasury yield, that's bullish, VAMs still. You got minus 12 basis points of downside versus 34 basis points of upside in its probable range. High yield OAS neutral, VAMs still minus 46 basis points of downside versus 8 basis points of upside in that probable range. S&P 500 bounced off the lower boundary of its probable range yesterday. That is still neutral, VAMs with minus 0.9% of downside versus 6.9% of upside. VIX neutral, VAMs bounced off the upper boundary of its probable range yesterday. You got minus, 37% of downside versus 7% of upside there. NASDAQ 100 bearish, VAMs still also bouncing off the lower boundary of its probable range. You got minus 4.9% of downside versus 6.7% of upside. Russell 2000 neutral, VAM still minus 2.3% of downside versus 7.2% of upside. Bitcoin bearish, VAM still minus 11% of downside versus 3% of upside to the upper boundary of its probable range. Ethereum bearish, VAM still you got minus 11% of downside versus 4% of upside. I mean, one thing I call out is asset markets. Risk assets have been trading pretty sideways. Let's call it since the middle of January, sort of middle to end of January. And this sort of looks like the growth curve. And, we talked about this earlier in the year, the post-Omicron bounce. It was coming to a theater near you, and you actually, we're currently enjoying the popcorn and soda and all the snacks associated with that. But as we continue to call out, we do believe in several months' time, we're going to get to a scenario where the growth curve looks decidedly different, decidedly worse, particularly if our forecasts on inflation are sort of continue to play out. So with that, we'll be talking about that obviously in detail on Around the Horn and an upcoming macro scouting report. So stay tuned for that. Shanghai Composite bearish, VAM still. You got minus 2, or sorry, it's definitely crashed through the lower boundary of its probable range. It's exhausted now. So if you're short China, this definitely would be time to be booking gains on the short side of any Chinese ADRs today. You're probably going to get a vicious rally considering a lot of the moves we heard out of the PBOC came out after the close. WTI crude oil neutral, VAMs there. Minus 8% of downside versus 12% of upside. And then lastly, ag neutral, VAMs. You got minus 3.7% of downside versus 1.9% of upside. And then industrial metals neutral, VAMs minus 0.6% of downside versus 7% of upside in that probable range. So with that, Darius Dale presenting our macro minute for Tuesday, April 26, 2022. Best of luck out there today. Cheers.